Hi, everyone. This is Jeff Clark at goldsilver.com. I'm the senior analyst there. And as promised, this is the bonus video that Adam Taggart at Wealthion.com said that I would do for you all. So this is actually part of my workshop that I did at the New Orleans Investment Conference that I just returned from. It'll eventually be out on video. We don't know when, could be a month. We don't know what the quality is going to be like either. So Adam asked if I would just basically record my workshop for you for those of you here at Wealthion.com. So I hope you enjoy it. This talk is basically on 10 baggers. So those of you who like mining stocks might enjoy this, but it comes with a caveat, and that is this talk is not about producers. It's not about royalty companies. It's not about developers. This is entering the high speculation area of the mining equity space. So you have to be aware of that, and that comes with some cautions, which I'll go through as we go through this. But if you like the idea of investing a portion of your portfolio in stocks that I believe could actually be a 10x, in other words, 1,000% return, adding a zero to your investment, then this talk might be for you. So I'm actually going to go off screen here and share my screen with you so I can go through my slides with you. So let's do that now and make sure it works. And there we go. So this was the title of my talk, What the Next Gold Rush Could Look Like, and my candidates for the next 10 baggers. So let's jump in. So for those of you who don't know me, my dad was actually a gold prospector. He retired early and moved to California. And from the first time he saw that little shiny gold nugget in the bottom of his pan, he was hooked. And he went into it pretty much full time, did it for a couple decades. And he got pretty good at it. He was actually part of a team that would guarantee that if you bought a new metal detector, they would show you how to use it and guarantee you would actually find gold with it. And he always came through. So he even won some gold panning contests and that. So a lot of this rubbed off on me, of course. And then I eventually went to work at Casey Research and got trained under there, and became an analyst full-time with them. And now I'm with Mike Maloney. So, okay, first, let's talk about the elephant in the room. And that is the fact that gold and silver are just not responding to what all of us thought they would. And yet we've seen this before. If you look back in the 1970s, the black line in this chart there shows you what the gold price did back in the mid 1970s. And if you remember, this ended up being the gold and silver's biggest bull market in history. And yet for this 2 year period of time, there were all these major catalysts that should have been pushing gold and silver higher, and yet they didn't. They actually fell during this period of time. And this sounds awfully familiar, doesn't it? Back there in the mid 1970s, they had high inflation, higher than it is now. High unemployment, there was a recession, an energy crisis had just kicked off. There were political conflicts, geopolitical conflicts. And don't forget, back then is when gold became legal to own again in the United States. So a lot of analysts back then just assumed that gold and silver would rise from all these catalysts. And yet for a 2-year period of time, they did nothing but fall. And this sounds awfully familiar to now, right? And there's silver. The black line is again from the 1970s to, or excuse me, 1974 to 1976. And the lighter silver colored line is our current price overlaid with that. And you can see it's eerily similar to what happened back then. So what I think is happening right now, basically, and I said this also at my Silver Symposium talk, is basically that the spring for gold and silver is coiling tighter and tighter, because you can't have these kind of catalysts, this kind of environment, and not eventually see higher gold and silver prices. And that's exactly what we saw back then in the 1970s. After 1976 ended, gold began a relentless rise and then went into a parabolic rise. Basically, as I say there, the spring exploded. Gold went 7x after all those catalysts boiled over and pushed it higher. And of course, we all know what silver did. There was a jailbreak with the silver price, right? It was flat for 2 or 3 years. It started to rise and then it exploded higher. It basically went over 11x before it was all over back then. I think we have a similar situation now. Eventually, this coiling effect is going to kick in, and I think we will see higher gold and silver prices just like we did back then. This chart is interesting because it shows you all the gold bull markets that have occurred in modern times. You can see where we are, that green line. This chart is a couple weeks old now, but it shows you that if the gold bull market ended now, it would be tied for the lowest gain ever. So given the climate that we're in, it is much more likely, of course, that gold is going to match some of the higher percentage gains that we've seen in prior bull markets. How high does gold go? Here's some considerations for you. If you adjust it for inflation from its 1980 high, and again, that's using the CPI, which of course has been altered numerous times, over almost 24 times now, I believe, since 1980. So even using that faulty measure, it would imply that gold would be over $6,100 an ounce. If you average all the prior bull markets in that chart I just showed you, it'd be over $5,000 an ounce. Mike Maloney at goldsilver.com has said it could go as high as over $11,000 if it were to match the 1970s run, the whole time period. Rick Rule is on record just a couple weeks ago. He said he could see gold tripling within the next 4 years. Jim Rickards has had a number of different gold prices. I actually saw him and talked to him at the New Orleans Investment Conference. The range of his predictions is between $8,000 and $10,000 an ounce. I tried to do a quick survey of a bunch of gold analysts and to see what they are saying. And the range there, if you average them all out, is around 5,000 within the next 2 to 5 years. If 2% of MZM is the broadest measure of currency supply that we have today. If 2% of that were to go into the gold market, it would be nothing less than a triple in terms of the price. That gives you some idea of how high gold could head in the next run. For me, though, like I say in that first bullet point, I hope they're all wrong. I hope it doesn't go that high, because if it does, if it goes to $10,000 an ounce or $11,000 an ounce, anything like that, it implies we have some very ugly circumstances in our economy. And hey, I hope that doesn't happen. But the risk of that is certainly not zero. And it may be fairly high that we see a high gold price. Regardless, though, like I say there at the bottom, we don't need a $10,000 gold price to see massive profits in the mining stocks. The bottom line is, for me, ladies and gentlemen, I am incredibly bullish on gold and silver. I think this is the place to be. Think about it. Is there really a more favorable environment for gold right now? We have runaway currency creation. I like how Alex Daly, the president of Gold Silver, puts it. We're all peso millionaires now. There's plenty of currency sloshing around, but because it keeps losing more and more purchasing power, especially now with inflation rising, you're really just a peso millionaire. Unpayable debt levels, record deficit spending. The deficit right now is the largest in U.S. history. We have negative interest rates. I like this quote from the World Gold Council. When are things going to change? And this is what they said. Gold is struggling right now due to rosy expectations about inflation, economic growth, and the stock market. Gold's direction changes when those things change. In other words, if inflation is not transitory and it continues higher, if economic growth stalls, if the stock market has a correction or even a crash. But the bottom line for me is, because I believe in the big picture for gold and silver, that is why I'm buying miners. If I didn't have faith in the big picture for gold, I wouldn't be so aggressively buying miners, but I am. Okay, here's the table of contents of what I'm going to go over. I'm going to, number one, I'm going to give you some examples of multi-baggers in mining stocks over the past 50 years. I'll give you my 10-bagger candidates, why I like them. I'll give you my silver 10-bagger candidates. And then, yes, ladies and gentlemen, I am actually I actually have the audacity to say there are 20 beggar candidates out there. I'm going to give you two of them despite the falling gold and silver price, because once this thing turns around, we are going to see some stocks that do more than 10x. As you see there, disclosure, I do own everything I'm going to give you here, but I own a lot of mining stocks. These are the ones that are, in my opinion, have the best odds to actually go 10x. So you're ready? Here we go. First, the examples. This is the average return of gold and silver juniors in these different time periods. So they're in 1979 to 1980. So that doesn't even encompass the whole 1970. This is just the last year and a half or so, less than 2 years. The average return for those was 23 times the amount of your investment. In other words, they went up 23x. There was a Hemlo rally in the 1980s. There was a discovery around the Hemlo deposit, and the gold and silver juniors in that immediate area did over 40 times your investment in less than a year. This was just the miners that were associated with that particular deposit, because gold and silver were flat then. A lot of other miners did not do well, but this shows you that if there's a major discovery, even though silver and gold are not doing well, the stocks can do very well if they're related to that discovery. We also saw that in the 90s. There was a series of discoveries back in the 1990s, 38 times your investment. And you'll see I put there Doug Casey 100x. I asked everybody at the conference, can anybody name the stock that Doug Casey actually saw a 100x on his investment? He made 100 times his money on a certain investment, and somebody knew it right away. Believe it or not, it was actually Bre-X Minerals, which was actually a fraud. It ended up being a fraud. They were salting the samples, but it shows you that you can actually make a huge profit on a mining stock without it necessarily becoming a mine. And that's what I'm going to be focusing on this talk, is ones that they may or may not become a mine, but there can be a lot of excitement and a lot of appreciation in the stock price if they make some kind of discovery. Doug Casey started buying Bre-X around $1, he told me, and he started selling around $75. I think he got out, before it reached $100. And then I think it peaked around 110 or something like that. But there was some share adjustment prices there too. So some consolidations on the shares. So it was actually higher than that. But yes, he actually did make 100x on a mining stock back then. In the early 2000s, gold, you can see, did almost a 10x, silver did 16x. In 2016, there's 6 months there, 5 months, gold and silver juniors rose over 300%. Last year, in 2020, just in a 5-month period of time from their March low to their August high, 421%. So that shows you that these things cycle a lot, and there's a lot of history here that shows there can be big gains made in gold and silver juniors. Okay, so here we go. Here's my first 10 bagger candidate. Oh, nope, I'm sorry. One more slide. And this is important. I wanted to go over this slide with you because it really highlights an important fact if you're going to speculate in this sector. Explorers are a Bitcoin type opportunity if you'll be Babe Ruth. And I'm using him because it's baseball season, right? But everybody knows Babe Ruth was the home run king for many, many years, like 4 decades. But you'll see in that second bullet point on the left there, he also struck out more than anybody else. In fact, he struck out so much his strikeout record stood for 30 years. And the point is, that's what you are. You are Babe Ruth if you're going to speculate in potential 10 baggers. In other words, you're going to hit some home runs, and I believe you'll hit some grand slams, but you are going to strike out some, meaning some of these stocks are not going to work out. And the point of that is that means you must buy a basket. You cannot just get excited about one stock that I'm going to give you or that anybody gives you and buy just that one. You really need to make sure you buy a basket. So just create your own little mini fund, if you will, if you want to speculate on these stocks. Like I say on the right there, this is an excellent opportunity. maybe even better than last year, because remember, they did sell off last year in March, but now they're even just as undervalued as then. Number two, there's a lot of tax loss selling. A lot of investors at the conference thought that tax loss selling had already started, and maybe it has. So they're down more than usual just because of that factor. Number three, and this is important, a lot of lab results, those of you who are invested in the industry know this, but there's been very slow assay results coming back from the labs. It's really dragging some of the stocks down because investors lose interest when there's nothing exciting, especially with explorers, because they, in early stages, they live and die by drill results, right? Well, they haven't had that. There's been no exciting news, and so they're down even more than usual. You add all of that up, and again, in my opinion, this creates a very unique opportunity to really buy low and in an industry where there's just humongous potential right now. Okay, so here we go. Now here's my top 10 bagger list. These are in no particular order. In fact, I put them in alphabetical order. My first candidate is Cassier Gold. This is a stock I have been getting very excited about recently. I've been buying it a lot this past summer, and even just a couple of weeks ago, I bought a little bit more of it. So Cassier Gold has two deposits, north and south. It's in the heart of BC country. I'll show you that in a moment. The north deposit has 1 million ounces in inferred. That's the lowest confidence level for ounces. But the south has 7 historic mines. Where's the best place to look for gold and silver? Where it's been found before. Those mines, this whole area has seen minimal drilling. So this particular property is just ripe for further exploration and further discovery, because there's been a lot of mining here, but there's been no modern exploration. This is a crazy good team, and I do mean that. Doug Kerwin and David Reese, these guys are very well known in the industry. In fact, Doug Kerwin was approached by a mining company, and they wanted him to get involved, and he said no. And then another one came to him, then another one. And his answer for a long period of time was no, 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 no. And finally, when he came to Cassier Gold, he actually said yes. So he's involved in this company. David Reese is almost a celebrated structural geologist. So this is a very strong team that likes what they see here at Cassier Gold. And there's the recent drill results: 35 grams over 4 meters, 12 grams over 4 meters. Some of that, as you can see, is visible gold. But the real interesting thing here is that third bullet point. The recent drilling was 160 to 180 meters away from those 7 historical mines that I was telling you about. So it's away from that area. So what this means is that this mineralized zone is actually bigger than they realized, and it's also high grade. And you'll see a quote there from Quentin Henning. Quentin Henning is another geologist who's very well known, really making a lot of headway in the industry right now. He's becoming very popular. A lot of people are following him, including me, because he's very good at what he does. And he said, look, quote, these are great intercepts for the first holes outside of the existing area. This is an exciting story. The results were so good there that the company decided to put 2 more drill programs, 2 more drills into that area before winter sets in. And there's another quote from Quentin: if we only have one shot at finding another Muruntau. Now, Muruntau is actually the largest open pit gold mine. So he's comparing Cassier Gold's prospects to it. It will probably be in an orogenic gold belt like this one that Cassier Gold has. It's surrounded by large gold mines. This map shows British Columbia on the bottom, the Yukon on the top, and you can see, I'll let you read through these later. You can pause the video if you want, but look at all the mines, major, huge mines that are in this area. Cassier Gold's flagship project is that gold triangle there right in the middle. You can see this is a highly prospective area. And like I say, there was actually the site of a gold rush back in the 1800s. You've heard of the California gold rush. Well, Cassier's properties was the site of a gold rush in Canada back in the late 1800s. You can see on the left all the companies that are involved here. Crescat Capital, that's who Quentin Henning is with. Sprott is there. There's a total of 10 institutional investors already in the stock. You can see that retail investors is less than half of the market cap of this stock. So that means it's in very strong hands. I included that picture on the right, by the way, because that's visible gold right at the South Cassier site where they're working. My dad actually, that picture reminds me of something my dad actually found. He found this huge, the thing must have weighed 13 pounds or something like that. It was a beautiful gold in quartz piece that he found, and it looked similar to that. It was just the gold weaving all throughout the rest of the piece there. It was through the crystal. It was beautiful. He eventually broke it down and had it made into jewelry. So, but there you get all that perspective, the nature of this opportunity here for a $30 million market cap. That's very low. Now, these slides were prepared a week or 10 days ago. So the market cap may be a little higher than that right now with all these. But again, this is dramatically undervalued. Think about it. This stock could go 10x and would still only be a $300 million market cap. And there's a lot of perspective here. So this is a stock I like. Next up is Exploits Discovery. Now, I wanted some exposure to Newfoundland. If you don't know, Newfoundland is the site of a lot of it's a site of a major gold rush right now. There's been a lot of staking up there, a lot of discoveries. And this is the map of that area. So the red is what exploits, that's their properties. That blue you see on the right, the big long blue area, that's newfound gold. So if any of you bought that, congratulations, that's done very well. It's been a major discovery. You can see exploits land is all around that. Now this map, this staking map, is from a year ago. Here it is from December, and you can see the jump in the number of companies that have staked land in the area. Again, exploits property is all the red, newfound gold is the blue. The reason I'm not recommending newfound gold, by the way, is because the stock has already run up a lot. I mean, I'm not going to chase something that's already done basically a 10x. And here's the area now here just this past summer. You can see the explosion in the staking that's been made by a lot of companies in the area. Again, exploits is basically in the red. So what's going on here? Why did all this happen? Well, basically because the land wasn't available. They couldn't stake it until the late 1970s. And at that point, a lot of the staking was focused on lead and zinc. They didn't know there was all this gold potential back then. So there's basically been very little exploration done in Newfoundland until just now. And now is the critical time. One reason I picked exploits is because the area is all staked out, and yet so if you don't own anything there, it's too late. That all that's left is moose pasture. Exploits now has the second biggest land position in the area, so there's massive potential here. There's a lot of ground to assess. And of course, the drawback is they have the second biggest land position in the area. So they have a lot of work to do. It's going to take them time to just even assess all this to know where they want to put, all the drill pads and things like that. But the bottom line is this is a brand new camp. There's major discovery potential. There are two major faults running right through the middle of their properties. There's a brand new CEO involved. The interim CEO was Bill Sheriff, who is the CEO of Encore Energy, by the way, for those of you who are interested in uranium. That's a strong pick. Anyway, he stepped down for this new CEO who's been involved in substantially bigger companies before. So this is someone who knows how to lead a company of the size of Exploits into being a bigger company. Like I said, they're drilling right now. There's assays pending. They are subject to slow lab results right now, but they've shored up the management team and the geology team. They have enough cash for the next year. And by the way, that last point there, you can see Eric Sprott actually increased his ownership from 15% to 21% just recently over the past month or so. And all this for less than a $50 million market cap. So I like the odds of exploits too. So this is one I've been buying. Okay, next up, Grand Portage. It's pronounced Grand Portage. So you have to put on your French accent if you want to pronounce it correctly. But basically, this is the Herber project up in Alaska. There are multiple past producing mines on their property or right beside their property. So this is a very prospective area to be looking for more gold. Again, where's the best place to find gold? Where they found it before. That's exactly what Grand Portage is doing. They have 1.5 million ounce resource there in indicated. You can see it's high grade. Here's the interesting thing about Grand Portage. A lot of these properties, they've only drilled 700 feet deep, but epithermal deposits, as you see there, can go a lot deeper, up to 3,500 meters deep. So there's a lot of at depth drilling that they can do here. They've just completed 20 holes. There's still 2 drill rigs turning right now. There's lots of core at the lab, meaning there'll be a lot of assay results coming out. So that's all potential catalysts. Importantly, they've only tested about 30% of the property. So there's a lot of drilling here. There's at least 2 to 3 years of drilling more that they can do. Next year, they will be doing an updated resource. That could be interesting. And then they'll go into a preliminary economic assessment. And look at this. This is a strong show of support here. 99% of the recent warrants were exercised. In other words, 99% of the investors that bought into a private placement exercised those warrants. And the board management advisors also exercised 5 million. So there's a lot of investors that see a lot of potential in this stock here. And again, you get all that for a $51 million market cap. This is a infrared testing image I wanted you to see. So the pink in the middle, those squiggly lines going across there beside the pink words or purple words, whatever they are, is where they're working now. As you can see, there's a lot of veins there. There's a lot of work they can do there yet. But when they did this infrared testing, look what showed up. The squiggly lines, both north and south, those are other veins that are in this area they didn't even know about. They can yet explore. So this structure probably is bigger than they probably realized. And the land they own is the purple outline you can see in the area there. So they already own all this. They can be exploring all that. So a lot of potential here. This is something you want to hold for a couple of years to give management just a chance to test it all. Maple Gold is my next candidate. If you're on Twitter, you know I like this stock. Basically, they have a joint venture on 2 projects with Agnico Eagle. This is in the Abitibi area. This is a highly prospective area in Canada. What perked me up first about Maple Gold was that Agnico Eagle is a very conservative company. They're very technically savvy. They're one of the strongest, best run gold producers in Canada. They looked at the properties Maple Gold has and decided to spend $18 million over the next 4 years. The first year is almost done now, but they decided to spend that much money. That's how prospective they see this area. And again, this is a conservative company that is very technically savvy. So that was a very strong indication to me that there could be something here. First of all is Douay. You can see the first drill results here, 330 grams over a meter, 1.5 grams over 132 meters. So very good drill intercepts here. There's going to be an updated resource this quarter. I'm going to talk to you more about Douay in a second. The second project is Joutel. This is actually a past producing mine. There you go again. The best place to find gold is where it's been found before. The interesting thing about Joutel, what to know about that is they just finished the digitizing, the collating of all the 250 meters of historical drill data that's been done on it before. And yes, that is not a misprint. 250,000 meters of drilling have been done here that had not been digitized before. So what this allows them to do, instead of doing blind exploration, they can do what's called definition drilling. They can really zero in on where they want to drill based on all this past data. It really pushes them forward by years. They also own the Eagle mine themselves. This is not part of the JV with Agnico. This is also a past producing mine. There's been no follow-up here since the 1990s. They're drilling right now as we speak. So There's a lot of potential there as well. This is what I wanted you to see about Due. So the top part there, the gray and then the gold and the green there you see is the drilling that they have done, that Maple Gold and Agnico Eagle have done so far. And you can see on the scale there, they've only gone down about 400 meters, maybe even less than that. But the thing is, all the big mines in the area, Casa Berardi, Goldex, Canadian Malartic, all of these big mines in this immediate area have had mineralization and resources and been mining down to as deep as 1,500 to 2,000 meters. And that's what these arrows, these big fat arrows show. This is how much more drilling they can do just at Due. And you can see this is a big area. It's 6 kilometers wide, which is what, 3.7 miles, give or take. So this is a big area. There's a lot of exploration potential here. On the left, you can see there's been strong institutional interest in the stock. Agnico Eagle, Fidelity, Crescott Capital, Quinton Henning again. They're invested in this stock. And there on the right, you can see I describe this as optimum potential at an optimum price. First of all, there's a couple of analysts that cover, and by the way, they just had an analyst tour, so we're probably going to see a couple other analysts pick up coverage on the stock, which means their clients would be buying the stock. But the analyst that has been covering it from Agendas Capital, he sees a 10 million ounce resource here, maybe even more than that. So there is massive potential. Could this stock really do 10x? Well, if they have 10 million ounces, if they come up with that, and that gets in the proven and probable category, yes, this could be a 10x stock. Brian Lundeen, if you don't know him, he was actually the host. He holds the New Orleans Investment Conference. He's been writing about juniors for many, many years. He said, quote, one of the junior sector's more compelling district scale gold plays. And I agree with that 100%. The knock on the stock there you see in the last bullet point is it does have a lot of shares outstanding. It has, I think on a fully diluted basis, it's about 400 million. So that's an awful lot of shares out. I actually had dinner with Matthew Horner, the CEO of Maple Gold. And I asked him about that. And I said, look, that's a legitimate complaint about the stock. And his response is, well, we could consider a rollback and we may do that, but we won't do it just to do it. A lot of companies that do it just for that reason, it usually doesn't work out. He wants to do it if it coincides with some major news or major development or major more discovery or something else compelling that he can sort of tag team the rollback on shares with. So we could see a change there. Don't know if that's going to happen or not, but that's a possibility. And it's on their radar. And that was good to hear. The thing I'll point out is the current price is actually below the December 2020 financing that a lot of institutional investors did. So you can actually get a better price now than they did if you're interested in this stock. So like I say there, in my opinion, I've been saying for a while, Maple Gold will be a $2 stock. I still think that's going to happen. I think it's 25 or 30 cents US now. These are all US prices, by the way, I'm talking about. The biggest risk to that not being a $2 stock is them not finding more gold. It's them getting bought out because Agnico owns, 50% of this now. They may want to grab the whole thing before it gets to 10 million ounces, if it gets to that point. But that's probably its biggest risk, which of course would still benefit us as shareholders. So Maple Gold is a buy in my opinion. Okay, next up is P2 Gold. P2 Gold, this is a very strong team. I met with both the CEO and the chief geologist at the New Orleans Investment Conference. They both worked at Silver Standard. If you remember, that was a huge win way back in the day. And then Pretium Resources, which was also another big win for investors. And so P2, I believe, stands for Pretium 2. Is this, could this be Pretium 2? That's the idea. The flagship project is Gabs in Nevada. This is actually a gold copper project, 1.8 million ounce in the inferred. However, there was an independent resource estimate that was done not by P2 management, but outside of the company. And they estimated there's anywhere from 1 to 2.25 million ounces more just in the known zones. If you add in the other zones management believes are sitting on here in Gabs, They're targeting a 4 to 5 million ounce deposit. That would be a major, major deposit. It would definitely go on the M&A list for potentially getting taken out. They've drilled 94 holes so far. Over a third of them ended in mineralization. This actually occurred before they got a hold of the property, but over a third of those holes ended in mineralization, meaning, in other words, there's more gold probably below where the drill stopped. This is a new project. First two holes, 1.5 grams over 140 meters. That's a very strong hit. There's at least 2 more years of drilling here, management believes. They're already doing metallurgical testing. This is very good to see. You want to see management teams jump into doing metallurgical testing right off the bat so they know what they're dealing with. They know how if the metallurgy is going to work out or not. And you can see that the recoveries have been very, very high for both gold and copper. They have 27 drill holes pending. They're going to have drill results every couple of weeks for the next 2 to 3 months. For the rest of this year, there's going to be plenty of catalysts coming out for P2 Gold. They're going to do an updated resource next quarter, and then a PEA in June. The second project is BAM, and there on the left of the map, you can see where it's located there. It's in the heart of what's called the Golden Triangles. This is a very prospective area. You can pause the video later if you want to look and see all the mines that are in the area. But this is highly prospective. Management believes this is a new discovery, as I say there on the right. So in August, just a couple of months ago, they reported 2.6 grams gold over 45 meters. Great hit. Then in early October, 1.1% copper over 39 meters. That's very high grade. And then just last week before the conference, they reported 1.4 grams over 85 meters, another strong hit. So they probably are right that this is a new discovery. This is strong mineralization, and this could be a project that could grow and grow and grow. They've already targeted 8,000 to 10,000 meters of drilling here next year. As you can see there, they cannot drill in the winter. So they're pretty much shut down now for the winter. But he did point out to me that this is actually easier to drill than Pretium. Pretium is way up in the mountains. Oh, pardon me. So that this one's actually easier to drill. So that's a good thing. Okay, a couple of things real quick about the stock. Number one, they do owe $9 million to a company called Waterton for the purchase of GABs. Now, to get rid of that, we think that the reason the stock hasn't responded real well is because it's an overhang on the stock. Well, this junior company still owes $9 million to this other company. So once that's removed, we think that will probably be a positive catalyst for the stock. And what management told me is they may actually sell a royalty on that to get rid of that big overhang. That would be great if they could do that. Number two, the CEO and the chief geologist are both buying their own stock right now at market prices. They both put in a combined 3.5 million in the last financing. So their capital, their own cash is definitely where their mouth is. They're investing heavily into their own company. That's a very good sign. We want them, you want the executives of the company to be aligned with us. And these guys definitely are. Now, I hate suggesting this because, saying it could be $1 billion market cap company someday is quite a claim. But the potential is definitely here with these two different projects. And these guys have done it before. They've had $1 billion market cap companies before. And yet the market cap right now is only 23 million. So the potential here is very, very high for it becoming a 10-bagger. A lot of work to do. It'll take some time, but the potential is clearly there. Okay, let's get into silver candidates. So first of all, why am I talking, separating out just some silver candidates? Well, there's some very good reasons. First of all, silver is more undervalued than gold. I think a lot of people watching this know it's the only major asset priced still below its 1980 high. Try and find one that's still, the price of the asset is below its 1980 high. Other than computer chips, I don't think you can find one. Silver has higher leverage than gold. Silver's outperformed gold in every major bull market. We expect that to happen again. The market is much smaller than gold. Check this out. If you look at the market cap of the Wilshire 5000, 1% of the Wilshire 5000 as of a week ago is 61 times bigger than the entire primary silver industry. And I'm referring just to the producers there. So if just some of that capital begins to shift over into the silver industry, imagine what could happen. There's also very few equity choices, much fewer than in gold. There's only 5 primary silver producers that get over 50% of their revenue from silver, believe it or not. Now, I'm excluding the real small ones there, the ones that produce 1 million ounces a year or less. And there will be a couple, pardon me, coming on next year, like Silvercrest. MAG will be at commercial levels by 2022. And those get more than 50% of their revenue from silver. But as of right now, there's only 5, and 4 of them are relatively small. The biggest of them is First Majestic Silver. I like them too because they're going to be a target when some of this institutional capital wants to move into the silver industry. They're going to go to the big liquid names, at least first, and that'll include First Majestic Silver. So, okay, so here are my silver candidates for 10 baggers. First up is BlackRock Silver. If you follow me on Twitter, you know I like this stock. Basically, this is the Tonopah district in Nevada. Old timers were mining high-grade ore there for years. There's been no modern exploration until now, until BlackRock got a hold of this. They've outlined 10 mineralized veins already. The latest intercepts, it keeps getting stronger and stronger. The latest intercepts all graded over a kilogram. In other words, not grams per ton or ounces per ton, but kilograms per ton. This is very high grade. And they just hit their highest grade hole ever. Like I say, they keep finding better and better results on these veins. And it remains open in all directions. They have 24 more holes at the lab right now, so there's going to be plenty of news here for the rest of the year. They just staked some land north of the deposit. I'll show you that in a minute, but these are completely new veins based on geophysics. This could be another area for another discovery. They're going to have their very first resource estimate next quarter. That could surprise the market. The reason I say that is because an independent preliminary estimate there was done by an outside company. This was not done by BlackRock Silver Management. And they estimated there was 75 million ounces of 500 grams per ton over 2.8 meter widths. The reason that's important is one of the knocks on BlackRock Silver, one of the concerns was some of these veins are narrow, and they are. But if you can get a deposit that is that big with that much grade and the widths are not that narrow, this could be a mine someday. That's what is at issue here. Interestingly, First Majestic Silver has bought this stock twice now. They just announced while I was at the conference, they put another $2 million into the stocks. They've invested $3.2 million now into BlackRock Silver. That's very interesting. As Brian Lundin has said, he called this a leveraged smart money bet on silver, and I would certainly agree with that. This map shows you where they've been drilling. The red is all the drill results in all these areas. The yellow is where the upcoming resource is going to be estimated from. So you can see they're already drilling outside of that resource. And up there where the title of the slide is the property that they just purchased, the staking they just did up there. And again, that could be another new discovery. We'll see. But expanding, along a known mineralized trend is always a very prospective thing. And like I said, the question all along here has been, is it too narrow, and do these dots really connect up? Is this going to connect up so you can actually make a mineable deposit out of it? That's what's been at question. And there you can see the quote from Quentin Henning at the bottom. The dots are starting to connect. Based on the drill results he's seen, he believes it's starting to connect. So if it does, and the market sees that, yes, this could be a 10x stock. Reyna Silver, I like this company. They've acquired 2 assets from MAG Silver. This is Dr. Peter McGough. Some call him Mr. Mexico because he's so he's so well known in that area for being one of the top geologists in Mexico. The flagship is the GG project, and based on what Peter is saying, he believes this is the largest known CRD or carbonate replacement deposit in Mexico. What he's looking for is the source of it. So that's what the question is. Does he find it? Does he and his team find the source of this? They've done 12,000 meters drilling. It's already done. Assays are pending. They've been a victim of slow assay reports, I have to say. So, but when they do come, hopefully we'll see some good news there. The stock is in very strong hands. Institutions own 40%, management owns 17%. This is a speculation, but I will point out, Peter McGaw actually did his PhD on this mineralized area of Mexico. So he's been studying this area for literally 40 years. So if anybody can find it, he can. And this is what he believes. So investing in Reyna Silver is investing a little bit of faith in Peter and him and his team finding the source of this deposit. And here's the thing, if they do, this is the market cap of some comparable silver companies. That's Reyna Silver and gold there near the bottom. You can see the market cap of some of the other companies that have had major discoveries there above them. So just for example, you can look up and see Vizsla Silver. You know, if Reyna were to find the source of this deposit and it did something like what Vizsla has now, that would be a 4X, you know, in the stock in a relatively short period of time. And yes, ladies and gentlemen, I have the audacity in a falling gold and silver price environment to actually tell you I believe there are 20 bagger candidates out there. So these, again, like these others, this is speculative. You must buy a basket if you like these. I don't want you to focus on just one, but I do think these have extraordinary potential. So what are the criteria to actually you know, claim that a stock could have a 20 bagger or a 20x potential? Well, first of all, number one, you're probably going to have to invest in pre-discovery exploration. This is your greatest risk when you're buying a mining stock. A company that has not had not had a discovery yet. This is pre-discovery. What that means is this could be your greatest reward as well. Number two, we need to have a company, a stock that has a very low market cap. That's kind of obvious. It's much easier for a stock to go 20x with a $50 million market cap than a $500 million market cap. Number three, obviously, it must have very prospective property. It has to be something that you can see being both big and high grade. It must have a superior geological team looking at it. You can't have just anybody looking at this because you need the strongest team that can maximize the potential here. Number four, it has to be off the radar of institutional investors. They can't be, they're not looking at it yet. They haven't discovered it yet, or they simply can't buy it yet. For the ones I'm giving you, institutional investors really can't come into the stock without impacting the price too much. So they can't even buy it yet. So if these companies I give you have any success, we could see institutions move into it, and that could really do wonders for the stock price. And then last, there's brownfields versus greenfields. Brownfields is what I've been saying, where's the best place to find gold, where it's been found before. That's a brownfields exploration program. They're looking at areas with, they're either expanding or they're a long trend, or they're looking near an old mine or something like that where there's known gold and silver mineralization. Greenfields is the opposite of that. There's no known gold or silver mineralization. There's never been any exploration there. It's a completely new site that one is looking for gold or silver. This is your highest risk as a greenfields project. So as you go through your mining stock career, if you see a greenfields project, just know that 9 times out of 10, even if they do work out, it does take a lot of time and a lot of capital to make that kind of discovery. There are exceptions, and I'm going to give you one of them. And here it is. This, ladies and gentlemen, is my first 20-bagger candidate, and it's Snowline Gold. This is a greenfields project. It's up in the Yukon. Basically, right now, they're chasing proof of concept that they can prove there could be a mineable deposit here. This is prospectors Ron and Scott Berdahl. Ron's the dad, Scott's the son. I've spent some time talking with Scott. I really like him. But over the past 3 decades, they've acquired a lot of land, 72,000 hectares now that they have staked in this area. And this entire area is either completely unexplored or underexplored. And yet Scott told me when they looked at the the geology in the area and what they were finding, they said any geologist would have staked what we saw. So that's a very good sign. There was $20 million of work done in this area before. So that's allowed them to formulate some geological models and some drill targets. And so far, very early stage, it's just getting started. But so far, the results have actually been high grade. There's actually been some visible gold in the results. That's a very strong indication. And of course, the system, just getting started, is open in all directions. There's Quentin Henning again, that geologist that I follow. He's involved in this as well. He said, quote, "This is very impressive for the first round of drilling. This is going to be a big one." So this is a very successful geologist saying this. There's assays pending for 9 more holes, one of which carried visible gold. This is what I wanted you to see. This is the map of the area. That's the Yukon on the right, Alaska on the left. The flagship projects for Snowline are the big gold stars there on the right, Einerson and Rogue. And you can see these are right on very specific gold belts. So this is a very highly prospective area where it would not be shocking to find more gold. And yes, these could be district scale potential based on what they've seen so far. And if so, yes, this could be a 20-bagger if they're successful. You can see there on the left, there's strong interest. Keith Neumeyer from First Majestic Silver is invested. Eric Sprott is invested. Quentin Henning is invested. So strong interest in the stock so far. And there on the right, there's an example of visible gold on their site that they've found. So you get all that and just a $35 million market cap. So this still wouldn't even be $1 billion company if they did a 20x. Now, there's a lot of work to do. It'll take some time. It'll take a lot of capital. It is a speculation, so be aware of that. But I like the odds here very, very much. I own it. It's a strong buy in my opinion. My other candidate is Silver Hammer Mining Corp. They have 3 highly prospective silver properties, all in areas of Kerner Pass production. So this is more brownfields exploration and basically applying modern exploration and drilling to areas that have known silver. So it was on a mine tour. Some of you may know, I was on a mine tour at the Silver Strand mine in Idaho this past summer. And it was very interesting because they have multiple veins there. There's a 5.5 kilometer length strike. What's interesting though, is that this is one of the very few projects in this district that's not been drilled deeper than 90 meters. And yet, most of the mines that operate in the area, there's a bunch of silver mines in this area. It's Coeur d'Alene, Idaho. It's known as the silver district of the world. Most have been drilled to 1,800 meters depth. So they have, really not drilled this site deep at all. So the odds of there being strong silver mineralization below here is very high. There was one drill below that 90-meter level back in 1997, and you can see it hit 1,900 grams per ton silver, even higher than what they've found closer to surface. So, and that's not uncommon to find higher mineralization as you go deeper. So they're drilling underground and at surface right now on Silver Strand. This is highly prospective. So when I left, I thought, wow, this is very interesting. There could really be something here. This is a good speculation. So I bought the stock. I get back from the tour, and a month later, there's another press release put out that they had bought 2 more silver properties. And at first, my reaction was, well, hey, wait, slow down, you guys. What happened to Silver Strand? Are you going to get yourselves spread too thin and all that? But basically, as I came to learn, these 2 projects they bought were simply too good to pass up. And that's how management put it to me. The first is Eliza in Nevada. Pardon me, this was a silver rush back in the 1800s. So again, you heard of the gold rush in California. There was a silver rush on this site in Nevada back in the 1800s. And look at that. The old timers were mining over 2,500 grams per ton silver back then. This area has never been drilled, seen any modern exploration whatsoever. So the mapping and sampling is done now, and it is under review. They did complete it just recently, so it's under review. Then there's the Silverton project down in Nevada. This is near Tonopah, which, by the way, is where Blackrock Silver is looking as well. This is also a past producing silver mine. It averaged as much as 30 ounces per ton while they were producing it. So very, very high grade. And again, it's seen no modern exploration whatsoever. This is highly prospective. They're doing geochemistry work there right now. So this is very early stage for that project. It'll probably be the third one to be explored, but that shows you the kind of potential it has. Now at Eliza, I wanted to show you this map because on the right there, you can see the fault line. That top third of that image is part of the image below, if that makes sense. So you see the fault line running through there. Most of the mining that was done at Eliza back in the day, that high grade I mentioned, was above the fault line. And but there's the fault line, and then below there is the yellow box, and that is the Eliza area. Basically, that is what's called the California mine. And the California mine, they couldn't really mine it back then because there's cover there. In other words, there's some ground above where the silver mineralization is. And so back in the 1800s, when you're working with just picks and shovels, you can't really get to that. So they stopped working, but they did do some assays back there. And you can see on the left, they found as much as 5,600 grams per ton up to 18,000 grams per ton silver equivalent at this California mine where that yellow box is. And you can see in the image below that they own all this. The red is their staking. So they own all of that. This again is very high grade stuff that's seen no modern exploration or drilling whatsoever. And they even have a document that goes back into the 1800s from the Mining Bureau back then that shows just how prospective this property was. So I'm personally excited about Silver Strand, but this one really, for me, really sticks out. There could be a lot of potential here. So in my opinion, Silverhammer meets the criteria for potential 20-bagger. It's pre-discovery. They're looking in 3 highly prospective areas for silver, but this is still pre-discovery, so there's a lot of potential. They have a very strong technical team. It's not yet caught the eye of big investors at all. They can't buy it. So, you know, if Silverhammer has some success here, we will see institutional investors move into it. You get all that for a $15 million market cap. So, I mean, the thing could go 10x and it would still only be $150 million market cap. So very, very prospective. I like it. So there you go. If you don't want to pick stocks on your own, here's some suggestions I could make. I've made these before, but basically Lobo Tigre was my mentor back at Casey Research in those days. He runs Independent Speculator right now. He has a service called My Take that's not expensive, and you can actually submit requests to him. Brian Lundeen, again, he's the host of the New Orleans Investment Conference. He's been writing about gold juniors for, probably 3 decades. And by the way, there's a discount there he gave he said I could give at the conference, and it's that link right there. So if you use that link, goldnewsletter.com/goldadvisor, he'll give you 50% off the first year of the newsletter. I believe that makes it just $99. Don't quote me on that, but it's half price, whatever it is. And then some of you may know I do write for Silver Chartist occasionally. The team covers technical analysis. I do fundamentals. It's very inexpensive, and there's a new issue every week. It's kind of crazy how much value he gives. To get that price, use that link there, silverchartistadvisor.com. You can take everything I just said and throw it out the window if you don't own some physical gold and silver. In my opinion, you need gold for portfolio protection, but you may need physical gold for lifestyle protection. In other words, we may actually need the physical metal in our hands or under our control. Having exposure to the price through some kind of ETF or something may not be enough if this thing gets really rocky. Like I said, I do work for goldsilver.com. I really enjoy working with Mike Maloney. He's all about education. That's why I was hired, was to help provide research and articles and things like that. His series, Hidden Secrets of Money, has over 97 million views now. It's kind of crazy. If you've not seen that, these are movie quality productions that cost him up to $250,000 each to produce. They're very good. They're very worth watching. They're on the goldsilver.com website. If you sign up for our newsletter, you can receive all of our research and videos and everything before the public gets it. We also have a mail-in storage program. I shared before, If you're not aware, I did have some gold stolen out of my house years ago. It was humiliating, embarrassing, angering, all of that. So I don't keep any gold in my house anymore. I have a dummy stash, in fact. So mine's all in professional storage in several places. But if you want to get some out of your house, Gold Silver is one of the few bullion dealers that actually has mail-in storage. You can mail in some of the bullion that you have. It has to meet certain criteria, but you can mail it in so you can get it out of your house. So I'm not suggesting you do that for all of your metal. You want some close, but if you don't want it all in one place and you know, that risk of having it all in one place, that might be something to consider. You can get the details on the website. If you want to follow me, I'm at The Gold Advisor on Twitter. I do disclose what I buy there as well. And last, just to wrap this up real quick, if you don't want to do, you know, manage your own portfolio, if you don't want to try to pick mining stocks in your own and know when to buy, when to sell, and all that, you can actually get exposure to the industry through Wealthion.com. They basically offer portfolio management. And the great thing is it's for like-minded investors. So it's for people like us that, you know, see what the Fed is doing, don't see how they're going to be able to manage this thing. They're skeptical of the Fed. They see inflated markets. And so they're on the same page as us, and yet they can manage your portfolio for you if you don't want to do stock picking. It's a way to really get a good risk-adjusted approach to getting exposure to miners if you want to do that. If you go to their site, Wealthion.com, there at the bottom, they'll give you a free, no obligation consultation. And you can have a whole team of people helping you with your portfolio if you'd like to do that. Okay, so that wraps it up. Thank you, ladies and gentlemen. I hope this was useful to you. And remember, if you like these stocks and you want to buy them, please buy a basket. Don't buy just one. And I do think if we're right about where gold and silver are going, I think some of these stocks are going to put a big smile on our face someday. So thank you, everyone.